Oh, we're going back to our roots with this one. So guys, in this video, welcome back everybody. We are going to be talking about Palantir. Now, when I first started my YouTube channel about 2 years ago at this point, this was one of the stocks that I was very interested in, and so were you guys, and we were breaking down this information to you guys on a day-to-day basis. But at that time, there were two main key problems with their corporate structure and their fundamentals at that time. Now, coming into 2023, all of those issues seemingly have been resolved. And with the AI boom that we have seen over the last couple of months, and that is likely to continue, this stock is looking pretty good. But before we go any further, I know you guys clicked on this video because of the title. Now, in this type of space here where we talk about stocks all of the time, there is a lot of sensationalism in trying to get attention. Now, that's exactly what I've done with this title. Now, Palantir can easily be a very high performing stock over the next 5 to 10 years. But what I don't want you guys to think is going to happen is that 5 to 10 year price movement is going to happen within the next week. Now, we have a boatload of information to cover in this video here. The stock-based compensation that these employees have been receiving. This is one of the main issues, and then the concentration of their clients. We're going to go over their technicals as well. But again, guys, without further ado, let's roll the intro. And again, if you guys wouldn't mind hitting that like button on this video here, drop a comment down below, subscribe for more videos like this, but let's get right into it. So guys, the first thing that I want to very briefly go over before we go through all of these fundamentals in a way that you guys probably have not seen before, I do want to briefly cover the technicals on this stock here because, again, those are going to be very important for you guys to determine where you want to be layering your purchases if you are interested in investing in this company over the long term. Now, again, nothing that I say in these videos is financial advice. What my job here is to do is give you guys better information about things that you guys are already interested in. So let's roll it right here. So when we go over and take a look at the Palantir chart on the daily time frame, well, what do we see? Well, this stock has made an absolutely massive move since the beginning of May 2023, going from the lows at $7.28 all the way to where it's currently trading right now at about $15.79. Now, again, the price is going to be different when you guys see this video, and you guys can see here, we have one of our awesome daily traffic lights that would have triggered you in. You get a retest off this level right here, and you absolutely exploded. And if you guys do want alerts like this and AI algorithms that are going to guide you through the market every single day, along with real-time unusual options activity and all of the other learning contents that make us the best community and trading platform that is out there, make sure you guys check out that link down below to trade1348.com and use code GAINZ, GAINZ, so that you guys can get your first month absolutely for free, get access to all the alerts, all of the proprietary algorithms, and see why thousands of traders are having so much success. But coming back over here, what do we see? Well, the stock has went on a pretty aggressive run. Now, there's a couple of different things that you guys can do in order to make sure that you're in the best position possible for success. First step, you could just wait. If this stock ends up coming back down, retesting this 13 EMA, or even coming back down and touching this red line here, this 48 EMA, those could be decent areas that you would like to purchase at. Now, again, you guys are going to get this chart as well once you get access to your free trial on the platform. Now, ideally, you would want to see this retest of this 200 EMA, but that's all the way down at around $10. That's a very significant drop from where we are currently trading. Now, is this stock due for a pullback? Well, a little bit. I mean, you are seeing the RSI cool off a little bit here. You are seeing the MACD losing its bullish momentum. But again, if you are a long-term investor, dollar cost averaging is going to be your friend. Now, guys, let's get into these two really important factors that were so heavily debated back in 2021 and 2022 for Palantir, which investors on one side were very for or really didn't care about some of these metrics, and other investors, as quoted by some of these articles, made Palantir, quote, unprofitable trash. So the first thing that we need to realize is, well, what is stock-based compensation? And when we think about what this is as a whole, well, this is a form of the company giving their employees equity. Now, why is this so bad, and why is this in Palantir's situation, a scenario in which investors were really, really terrified of. Well, when we come over to this article right here, we first have to understand a little bit how this is treated under the GAAP, generally accepted accounting principles. Under United States GAAP, stock-based compensation is recognized as a non-cash expense on the income statement, meaning that it is going to be counted against their revenues. Specifically, SBC expense is an operating expense, just like wages, and is allocated to the relevant operating line items. SBC, stock-based compensation, issued to direct labor, is allocated to cost of goods sold. SBC to R&D engineers, included with R&D expenses. SBC for management and those involved in selling and marketing is included in SG&A and other operating expenses. So, when we take a look at the history of Palantir and go through their history of stock-based compensation, well, this is why some of these investors wanted to stay far, far away. But not anymore. When you take a look at exactly what some of Palantir's stock-based compensation numbers were, let's take a look at 2021. They generated revenues of about $1.54 billion, but the total stock-based compensation expense was about $778 million. And the stock-based comp was approximately about 50.47% of total revenue. Remember what we just said, that it is treated as an expense. If you are paying out 50% of your total revenues, it's going to be very difficult to show profitability under United States generally accepted accounting principles. Now, let's go on to 2022. Well, you can see that, as these screenshots show right here, the total stock-based compensation expense actually went down by about $200 million here to $525 million when they had revenues of about $1.9 billion. Now, that was about 29% of total revenue for the full year or fiscal year of 2022. Now let's move on to what we've seen so far in 2023. Well, we see that total stock-based compensation in the first quarter of 2023 was about $114 million with revenues of about $525 million, meaning that stock-based compensation has gone from being about 50% of their total revenues to about 21%. That is a very, very good sign and has also helped Palantir have 2 consecutive quarters of profitability. Now, in addition to stock-based compensation being a hindrance to profitability, it's also viewed as dilutive because when you're issuing more shares, no matter who they are going to, eventually they can be sold on the open market. Meaning, just for example here, let's say that you owned 10 shares out of all 100 shares that were actually available in any given stock. If a company is paying out new shares of 50% of their total revenues, that is going to be pretty dilutive. You might be diluted by 10%. You might be diluted by, let's say, 20%, but that's not something that an institutional investor really wants to deal with. With companies like this and a lot of these new companies, institutional investment and institutional backing is very, very important. So let's actually take a look at what Palantir's shares outstanding actually are and have been over time. When you look at this screenshot here, you can see that steep uptick, and you can start to see recently that the uptrend of these shares outstanding is starting to slow down. All of these things with stock-based compensation starting to trickle down, the shares outstanding not aggressively ticking up anymore, are very good signs that could show us that Palantir could potentially have more consecutive quarters and maybe even a full year of profitability. That is a very, very good sign for the longevity of a tech company and a growth company such as Palantir. Now, when we think about growth and when we think about revenues, remember in the beginning of this video, we talked about 2 main things that I used to cite as being the main problems with Palantir. The first we just covered was stock-based compensation. The second was the concentration of revenues. Now, prior to relatively recently, the vast majority of Palantir's contracts were coming from governments. Now, one of the other things that I used to talk about was, again, we were in the time where the sickness, I don't know if you can say that on YouTube anymore, but you guys all know what I'm talking about. The sickness was really still kind of in full-fledged. And a lot of the contracts, the big contracts that Palantir was receiving from the United States Army, from the NHS over in the UK, had to do with the sickness. Now, we all knew that that was going to come to an end eventually. And what was Palantir then going to do when that type of revenue was no longer coming in? And this leads us to talking about this second problem that Palantir had, and that was their concentration of revenues. So let's take a look at one of the screenshots from one of Palantir's earnings reports in 2021. And as you guys can see right here, the total revenue recognized by us from the commercial contracts, not government, remember, where a lot of their money was coming from at this time. Remember, 2021. The total revenue recognized by us from the commercial contracts during the fiscal year ended December 31st, 2021 was $48.3 million. In addition to the above, as of December 31st, 2021, we have entered into certain commercial contracts, the total value, which is $168 million, that are contingent on the corresponding contemplated investment agreements being negotiated, approved, and executed. So remember, in 2021, they generated $48.3 million from these commercial contracts. Well, what was their total revenue in 2021? Well, it was about $1.5 billion. That is a very, very, very small percentage. Now let's move on to what actually happened throughout the year 2022. Of the $1.9 billion in revenue generated in 2022, 56% came from customers in the government segment and 44% came from customers in the commercial segment. Now, this is where it gets very interesting. As of December 31st, 2022, the cumulative amount of revenue recognized from strategic commercial contracts was $166.6 million, of which $118 million was recognized by us during the fiscal year that was ended December 31st, 2022. So that number went from $48.3 million to $118 million. These are very, very good signs that Palantir is diversifying their business. That is a very, very good thing to see their AI products, their data analytics products being used in the commercial segment. So, to kind of wrap this up in a little bow, and again, if you guys like these types of videos here where I break down these informations about these stocks here, make sure you guys drop a comment down below, hit that like button, and let me know, because I like making these types of videos for you guys, and I hope that you guys enjoy them too. So back in 2020, 2021, 2022, when all this hype was happening about these new companies, there were still pretty aggressive problems with the underlying business, whether it be stock-based compensation, whether it be the concentration of these contracts being in the government sector versus the commercial sector. But as this company has grown over the last essentially year and a half, 2 years, we are starting to see things turn in a very, very positive direction. Now, I'm not saying that you should go out and buy this stock right now. Again, we looked at the technicals and it is a little bit overcooked, but it is definitely something that you guys should be keeping on your radar. So guys, that is going to wrap it up for this video. Again, if you would like to subscribe for more videos like this, we do live stream and day trade every single morning if that is something that you are interested in. And make sure you guys are getting your free month to trade1348.com, where you get all the algorithms, all of the alerts, all of the learning tools, real-time unusual options activity. It is a one-stop shop for any investor or trader to come and learn to trade the proper way. So guys, that's going to wrap it up for this one. Peace.